Welcome back to the Wealthy Idiot Show. I found a really interesting video online. I want to review it and I want to see what he has to say and then kind of react to it and give my point of view. So let's get into it. All right, before we begin, my name's AJ. I'm the host here at the Wealthy Idiot Show. Please throw a like and subscribe down below, and let's start the video.
I have some bad news for you. You are probably not going to be rich. Not a particularly positive message to start a video on, but it's something that people need to hear from time to time. Unfortunately, this is not something that most people want to hear.
I guess it would be depending on your definition of what rich is. I look for financial independence, which means investment income that covers my living expenses. Your living expenses don't have to be high. So I think what he's saying here is most of us are not going to be like, Bugatti buying out the club on Saturday night kind of rich, and that's true. But could we all be financially independent? Yes. So I feel a little bit like what he's saying here is, don't go to the gym because probability of you getting healthy is really low, but that's also on you to put the effort in and to become successful yourself. So if we could show you the way, then it's on you now that you have the knowledge to become successful. So I want to put that out there. Yeah, probably most people won't be successful at this, but it is in your hands. It's something that's doable, so don't get discouraged.
So there is no shortage of people out there telling you exactly the opposite, normally as a way to pitch some kind of product. Now, of course, most of you watching know that
we're not pitching any product here, so don't worry about it.
YouTube ads saying that you can earn 6 figures a month by selling on Amazon, Forex trading, or flipping real estate are full of shit. But they still all follow a pretty similar routine. Hey, you can get rich, as long as you are willing to do XYZ, while listening to the advice I give you. Again, when it turns out that this advice is something that you have to pay for, most people get wise to the fact that it's all just a massive scam. Of course, some don't, which is tragic, and there really genuinely should be more done about this. But that's a story for another time, or a CoffeeZilla video. Instead, the focus of this video will be on a group of internet gurus with much more influence, a much larger following, and much more credibility. The personal finance personalities. So, it's time to learn how money works and find out why you probably shouldn't be learning to work your money like these popular YouTubers might suggest. Now, I want to preface this by saying that I personally enjoy watching people like Graham Stephan, Andre Zick, and from time to time even Dave Ramsey as a guilty pleasure. None of these guys are outright nefarious scammers, like the hustle bros you'll see pitching an Amazon automation course, and this automatically makes them a million times better than this other group. What's more is that they are genuinely entertaining. They give people a sneak peek into their own success while presenting relatively dry content in a way that is funny and easy to understand. The problem is that personal finance should be boring.
So he's separating people who are straight up scamming you, which is a major problem. When anyone talks about get rich quick, this is the way that you do it, and then they're chucking at you a bunch of things to charge you, chances are their method for getting rich quick is to take your money. And then he's separating those from the people who aren't really pushing a major product. I know that Graham Stephan and Meet Kevin do push classes, but they also have a really big wealth of knowledge for the things that they're teaching, and they've been successful at it, and they're teaching you to be successful at it. So we'll see what he has to say next. I wanted to stop at this boring bit because why? Why does it have to be boring? It's like saying anything worthwhile learning should suck learning it. Like, why is that the case? We should make anything that we're doing as interesting as possible so that more people learn it, so that more people can be successful.
The common saying that everything you need to know about personal finance should be able to fit on a postcard, and some authors have actually done it. But when you are committing to an upload schedule of 15-minute videos...
So he says this as if that's just a given fact. Everything you need to know about personal finance should fit on a postcard. So given that, which we've never proven or established is a good thing, everybody who produces more content than what fits on a postcard is automatically bad. I don't think personal finance should only fit on a postcard. There's no possible way that we could explain to you what you should be doing with just your taxes by putting that on a postcard. So the answer is no. personal finance is way more complicated than fitting anything onto a postcard. And if someone's telling you it should be that simple, then they don't know what they're talking about. That's something to be real careful about.
Every single day, every single week, you are going to run out of things on that postcard to talk about. Now, this is no good, because as these people will show you, they make millions of dollars a year from their daily videos. So they are not exactly going to turn around and say, oh well, I've taught you everything you need to know, so long and thanks for all the fish. Of course not. That would be silly. And I'm sure any one of us in their position would do the exact same thing that they are, which is riding that damn gravy train for as long as they can. But to do this, they need to create more and more content than what this postcard can hold. So they branch out into a few different broad categories: personal stories about their success, reactions, predictions, and making up new lessons. Now, to start off with, let's look at the least problematic of these formats: reaction videos.
That's good, because that's what we're doing right now. There's a huge category missing here, and that's news, which is probably the biggest category and the one that has the most content, because something new is always happening. So missing that seems to be important.
Reaction videos are everywhere on YouTube, and they get a bit of a bad rap. But when you think about it, this video format can range from absolutely terrible all the way to genuinely value-adding and informative. The videos that people like Graham or Kevin make are normally towards the good end. They will normally react to personal finance by watching video series like Millennial Money, or they talk about high-end real estate, which is obviously an area of expertise for these guys. There are others like Dave Ramsey, who will do live reactions to people that call into his show, and despite this being a bit repetitive, they aren't really doing any harm. If you want to argue that these live interviews are not really reaction videos, just think to yourself, am I watching this to see a solution to the person's problem, or am I watching this video to smugly partake in Dave's reaction to this person's situation? Even still, this is just a bit of light entertainment, and who knows, maybe we'll pick up a nugget of information along the way. No problems there, apart from when these reactions turn into predictions. Financial predictions are almost impossible to make. Even the largest financial firms in the world with teams of PhD quantitative analysts struggle to outperform regular market returns consistently, if at all. It's therefore frustrating to see someone like me, Kevin, make predictions about the future of a highly volatile stock like Tesla before his audience. And yes, I know, he gives the standard disclaimer that this is not financial advice.
Don't sue me, bro.
But when a supposedly reputable figure that positions themselves as a personal finance expert brings up an official-looking spreadsheet and predicts 100% growth within the next 12 months, well, it's not unrealistic to see how some of his impressionable audience would follow his not advice.
So I've watched Meet Kevin's stuff, and he does attempt to predict, because his entire shtick, if you will, is to see what people, or is single stock investments. So he's trying to see what companies and people are attempting to do to make a prediction about whether or not investing now will increase his net worth. But what he does is he sits down and he breaks down the numbers for the things that he finds important for why those stocks might be a good idea. So you could say, like, okay, well, it's bad that he has a prediction method or prediction style, and he's telling you, like, hey, this is what the future is going to look like, and so this is what I'm doing, and disclaimer, I'm not a personal finance expert, so if you lose a bunch of money, it's not on me. But I think what more importantly he's doing is he's saying, like, here's the data I'm looking at in order to make a decision, and you learn while watching that and hearing what he has to say about that data. I would not go and assume that he is 100% right. He's admitted to being wrong on multiple occasions. He's come out and said, like, hey, I made a mistake on this one. Because what he's doing is he's showing you how he's making decisions, what he's looking at, how he's parsing this data, and I think that's really interesting and valuable. So simply to say that he's making predictions is incorrect. So I think the difference would be if I was to get on this channel and be like, I think Tesla stocks are going up, 2 times, so put all your money into Tesla stocks, or I'm going to put all my money into Tesla stocks. And, financial disclaimer, don't do what I tell you because I'm not an expert. The difference between that and saying, like, here's all the data, here's the history, here's what I know, and this is what I think might happen as a result. Like informative, sort of informational predictions. I think I have a separate category than just straight predictions. Like, but again, don't just assume because, Meet Kevin's on YouTube saying go buy a Tesla, that's a good idea. Probably isn't always a good idea, but do go learn from him.
Now, this is just one of the most blatant examples, but all of these personal finance personalities is guilty of giving this not advice pieces of advice throughout their content. This can range anywhere from invest into dividend stocks all the way up to buy a duplex and rent out the other side. Both pieces of advice.
Now we skipped from predictions to advice. That's kind of interesting. So I just did a video on house hacking, buying a duplex and renting out the other side. Not sure how that has to do with predictions. Any kind of good financial information is useful. And if someone knows how to accomplish something by placing the numbers out and figuring out a good plan and then teaching you how to place the numbers out, I'd say that's the difference. I'm teaching you how to find the data in order to make a good decision. I'm not giving you the decision. And that's the difference here. So you have the power to make your own decisions. You should still go seek financial expertise if you need to. You should still talk to as many people as possible. You should still watch and read as much as possible. But with that information, you make a good decision about what it is you're trying to accomplish, whether it's house hacking or what, any kind of futures you're going to do as far as dividends or whatever. But just to say that, providing any kind of advice is now bad because the advice might not work out 100% of the time, that seems a little bit rough.
Necessarily bad, but are grossly overgeneralized and make no accommodations to the financial situation of their viewers. Now, my friend Richard over at The Plain Bagel actually made a video.
That's your job. So we're here to present information, give you as much detail as possible. You need to take that information and see how it fits within your own personal scheme. If you don't understand how it fits within your own plan, your own lifestyle, whatever, your own situation, whatever that looks like, you need to watch and read more in order to get the information necessary.
Last week that explored the issue of picking stocks and why he doesn't offer stock picks. On its surface, this should be taken as a bit of wisdom, considering it is his literal career to analyze investments, and he also has taken the lucrative test to become a chartered financial analyst. I was actually considering not making a video after seeing that one because I thought Mr. Bagel did a pretty fair and well-rounded argument against all of this. But then I saw this. Alright, this is where the serious issue starts. Making up new rules for people to follow. I hate to break it to you, and I truly do mean this in the nicest way possible, but Graham Stephan is an ex-real estate agent and a social media influencer. He does not know the 5 best investments to make you rich. For that matter, nobody knows any investments that will make you rich, and if they did, they sure wouldn't be sharing them on a YouTube video. Despite popular opinion these days, good investments should not double overnight. They should instead continually provide value over many years or decades and return that value back to the investor over the same time period. The generally accepted rate of return for a well-diversified portfolio is anywhere between 6% all the way up to 12% if you are doing really well. The bad news here is that it's not going to make you rich, just like we said at the beginning of the video. Well, actually, it's not going to make you rich unless you have a decent income already and are very disciplined about consistently contributing to this portfolio over a long enough time period for compounded interest to do its thing. Even then, it will make you old and rich, which is not what people want. What they do want is to hear about how the people talking to them got so rich, which is where we get the last type of concerning content.
Okay, there were a lot of assumptions there. First off, it depends on what your definition of rich is. Again, if your definition of rich is financially independent, then anybody can do that. Second, yes, the answer is yes. Almost all of us, if we're consistently investing over time, we have a 6 to 12% growth. We will get to that financial independence stage and maybe a little bit of wealth in that stage later in our life. That's expected. I don't believe Graham Stephan says that that isn't expected. I watched a lot of his content and I think that he says that that's the case. That's what we say here. Most people aren't going to get rich overnight. Most people aren't going to be movie stars, athletes, musicians, and get some giant contract in order to be rich overnight. Most people are going to grow it slowly over time. And that's what we teach. That's what most of these people teach. And I know that that's not sexy. People want to be rich tomorrow, but we basically have 2 options. Most people who work like 9 to 5 jobs have 2 options: be poor now and be poor later, Be poor now, be rich later. That's it. So it seems a little bit discouraging to make this distinction here. I'll give him that Graham Stephan is obviously placing some clickbait there. I don't think that if you watch that video, he's actually going to say, do these 5 things and you'll be rich. I think probably what you're going to hear is him explaining a couple of smart investment strategies that he found that are working for people, right? So that would mean by like, maybe you say, I found the one way to get wealthy. Real clickbaity, and you click on it and it's like, you put money in your 401k because your employer matches it and money doubles overnight, right? Yes, both those 2 things are correct, but you're not going to get super duper, Porsche buying wealthy tomorrow by doing that method. I don't think that Graham Stephan was saying that, and this producer doesn't go into the actual video to tell us what the actual content was. He just sort of rages at the clickbaity title. All right, let's keep going.
Personal stories about their success. Now, who doesn't love a good success story, especially when it's the tale of a scrappy underdog proving all the naysayers wrong, which is something most of these guys have. Graham didn't get into college, Meet Kevin started from less than $1,000, Dave Ramsey went totally bankrupt, and the same is true for the rest of them. None are turning around and saying I studied like crazy through high school, got into a good university, and became a doctor or an investment banker. Why? Well, because their backgrounds are much more relatable to the average audience, which makes achieving fortunes for that audience sound much more attainable. Now, that's not to say that these backstories are all a lie, but more so that they are just the product of survivorship bias. For every Dave, Graham, and Kevin, there are thousands of people that didn't have the unique set of skills and the luck to break into the incredibly lucrative roles they found themselves in. Sure, Graham didn't go to college, but he did work his way into an incredibly prestigious real estate firm. So, what he lacked in book smarts were obviously made up for with personal branding and good old-fashioned sales ability. If you are a fantastic salesman, then sure, go ahead. There is actually a widely accepted array of high-paying jobs with varying levels of effort to certainty. Sales sits somewhere towards the riskier side of this array. Something that is very high effort would be becoming a surgeon or dentist. It takes years and years of medical school, but once you are practicing, you are all but guaranteed a high income and a standard of living for the rest of your life. Of course, at the other end of the spectrum is something like becoming a rock star, famous actor, or yeah, even a YouTuber. It doesn't take too much effort when compared to years in med school or 100-hour weeks in an investment bank, but it's also incredibly unlikely to pay off. Whether they do it intentionally or not, the personal finance personalities perpetuate the narrative of dropping out of school and building your own destiny, which has worked well for them, but will not work for most people. It also...
With no data does he say that, which is interesting. So, the Wealthy Idiots were founded by 2 Marines. We both went to college. I'm not sure that us going to college had anything to do with our success. I broke down in a previous episode how it's possible to not go to college and probably be more successful based off of the data that's coming out. And I'm not talking about jobs specific to like real estate, salesman, brand building, or even YouTubing. In my case, I broke down coding, just basic coding. A lot of STEM jobs, you can get a good salary that will get you to a financially independent place quicker. You could also do hustles on the side, Uber, DoorDash, find other kinds of businesses. And I think it's with no data does he just say that you can't be, that most people will be successful by following the formula preset by society in general. I have a feeling he's going to say something about, these guys made it rich off of YouTube. I know for a fact, Meet Kevin made his first several $1,000,000 before getting onto YouTube. Graham Stephan made quite a bit. Yeah, and I get that they're in real estate. I'm not in real estate. And I don't make as much money as they do. I don't make any money off of this YouTube stuff. And neither does my partner, DC. And we just work and we invest, and we've done this for a while to the point where we've seen the growth over time, and we can calculate and know when we're going to hit those financial independence stages, retirement stages, wealth stages. And we know that that's going to take place, and we're average ordinary people. So yeah, I'm not going to be like, $60 million rich tomorrow in my early 20s. I'm in my late 30s. So I'm behind these guys, obviously, but we're going to be in a good place. My family's going to be set and secure following a lot of the methods that we teach here and a lot of the methods that these guys teach. So to write off all of this stuff simply because they make money off of YouTube, I think is really dishonest.
sounds eerily familiar to the promises made by the more despicable side of the financial gurus.
Drop out of college.
Now, there is one last problem with all these personal backstories, and that is that they are used to justify all these other pieces of content. To demonstrate this, we are once again going to pick on Meet Kevin. One of his most popular videos is a tale of how he built up his property portfolio from $0 to $5.5 million by the age of 27. You are welcome to go and watch the video, but the TLDR is that through a series of flips and equity releases, he built up a highly leveraged position of real estate assets that were cash flow positive. Sounds great, but it is incredibly risky. Take a 5-to-1 leverage position in the stock market and most people will think you lost your mind. But take a 10-to-1 leverage position on a house and you're an investment genius. Most people don't realize how risky real estate can be. Now, of course, Kevin was lucky. He started investing at the start of one of the longest real estate bull runs in history, and in his defense, he has since deleveraged his position significantly. But this is the definition of survivorship bias. Nobody is going to make a video of how they lost their life savings trying to flip homes. Had Kevin started his investment journey in 2004, he certainly wouldn't be telling stories of financial success.
So Kevin didn't flip homes. He renovated homes and he rented them out and produced cash flow. There is risk in that, and when you leverage, meaning you take out debt in order to invest in anything, there's always risk in that. But there's no data here to explain what the risk is for real estate investing and doing it intelligently and doing it correctly. He's just making a blanket statement that real estate investment is risky, therefore he got lucky, and now that he's lucky, he's going to go around sharing his expertise. And people with failure stories in real estate aren't going to be doing that. There are a lot of failure stories in real estate. Most of them have to do with very clear-cut bad decisions that were made, and doing the real estate correctly, following people who know how to do real estate correctly is very important to ensuring that you don't make those same mistakes and ruin your life over real estate investing. And I don't think that Meet Kevin really is dishonest about that. He talks about what he does to make sure that he's buffered his investments so that he has backup money in case something bad goes down. He over leverages at times in order to ensure that if the market dips, he's not taking a huge hit. In my case, right now I'm leveraged under 50%, meaning that to my asset ratio, my houses, and my debt is less than 50% of my total net worth in the houses, which means the market would have to crash over 50% in order for me to just break even. If I was to sell my houses off at 50% their current value and pay off my debts, I could. So in times of risk, like now, where it's very uncertain as to what's going to happen next as interest rates are going up, we want to make sure that we're over leveraged. Maybe we put more money in on a down payment on the next property to ensure that we're safe and secure. It does lower our ROI, our return on investment, but that's how you make sure that you're safe. So I think he's probably talking about the risks of flipping. Flipping is much more high risk. You have to actually be good at renovating a property and producing value for your effort. And a lot of people would jump into that with having no experience in that at all. I wouldn't recommend doing that. So, but to say that like flipping real estate is risky, therefore investing in real estate is risky, therefore Meet Kevin is a chance win because he just got in at the greatest run in real estate of all time. I mean, that's fairly dishonest and oversimplification.
Success on YouTube. If anything, he would be lucky to be an extra on The Big Short.
You just keep going to the bank and you ask for more money. Hey, there's a bubble.
Now, if I sound overly cynical, let me...
Okay, what happened in The Big Short? So, again, we're comparing apples and oranges here. In The Big Short, people were taking out adjustable rate mortgages. Don't do that. Don't take out adjustable rate mortgages. They were handing out mortgages to people with zero credit, no experience, no leverage or no collateral at all, so nothing in their bank accounts, and they were handing them out like candy, and rents were increasing at the time, right? So your entire strategy was just take out as much debt at this incredibly risky rate with an ARM, adjustable rate mortgage, and put as many tenants into those properties as possible, and they were told real estate never goes down. The problem with that is the second that real estate took a hit and it flipped a little bit, everybody was upside down on their loans. So they had to sell immediately or declare bankruptcy. And as that was happening, all these houses started just flooding the market, and the amount of buyers didn't really increase because people didn't have as much money, because the interest rate started to increase in that time period, so they didn't have as much available cash to purchase these homes, and the prices dropped, people went bankrupt. So this is what I'm talking about being protected against. Right now, that's not the case. There's not some giant amount of people who are extremely over leveraged that can't afford their mortgages. That could change because now we're seeing an increase in adjustable rate mortgages being taken out. But at this moment, that's not an issue. So it's comparing the wrong things.
Let me follow all this up by saying that given the opportunity to make as much money as these guys are by uploading videos to the internet, I would sell out so damn fast.
Sometimes YouTubers can sound like salespeople.
But they are still selling something. It might not be a course or an AI that can trade Forex for you or even a book, but they are selling you to keep on watching. Bleak realities about the tough road to reliably create wealth doesn't quite grab the attention like an open mouth and flashy headline. But in a world where attention is the new currency, you should spend yours wisely.
If you're watching this video, you're still like, all of this guy's investments is because of his YouTube money. You're 100% right.
Anyway, if you do happen to get rich by following in their footsteps, you should follow that all up by commenting how dumb I am on this video and watching our video on what to do next after making a few $1,000,000. If you did enjoy this video, please consider liking and subscribing to keep on learning how money.
Alright, I think that's it. Alright, so to sum up, because there is a other side to all of these stories, another extreme, that means that all these people and what they're telling you is invalid. You shouldn't watch them. Watch out for personal finance gurus. In my case, we get no money here at Wealthy Idiots for anything that we do. We would like to. That's not something that is out of the question at some point. But I can tell you right now, we've been doing the things that are correct in order to ensure our futures, to grow wealth, to be financially independent, and we have been successful. And we are literally just ordinary people. We're two Marines who went to Iraq at some point. We came back. We didn't have college degrees at that point. We left the Marine Corps, went into the private sector, and we had to figure stuff out. So I think that there are extremes here. There's people selling get rich quick, and that's exciting. People really want to get rich. They want to find that information to be successful, and they want it to be as easy as possible. Watch out for those. Those people are trying to separate you from your money. There's the side over here that's really pessimistic, that's saying, whatever you do, you're probably not going to be successful. That sounds like what this video is saying. Watch out for anything anybody tells you because they're selling something. Therefore, you're not going to be that successful either. The truth, like most of the time, is somewhere in between. You are going to be successful if you are intentional with what you do. You're not going to be Dave Ramsey rich. Nobody's making that claim. You're not going to be Meet Kevin rich. Nobody's making that claim. Very few people are going to get to that point where they are private jet, 20 car, giant mansion rich with the stuff that they do. But you can get to financial independence. You can be intelligent with your money. You can prepare for the future. You can protect your family. You can retire at some point. All of those things are possible. You need to make sure that you're following the steps to get there, and you're not listening to people telling you that it's impossible to do so. Like I said before, there's two types of people. People who are poor now and poor later. People who are poor now and who are wealthy later. That's going to be most of us. I know that could be a little bit discouraging, but the importance and the benefit of being financially independent is so big that it's worth taking a look at. It's worth learning this information so that you can be successful, you can reduce the stress that you have over money, and take your personal finances to the next step. So thanks for watching. I hope you continue. Please like and subscribe. Hit the like button for the YouTube algorithm. And don't let people discourage you. Don't let people get you down. This is a journey. It's not a sprint. It's not a sprint, it's a marathon, and we would love to have you run this marathon with us. So thanks again for watching. I'll see you guys next time.